Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Tuesday the 20th of March 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's take a look at overnight changes and price moves to be aware of. I'm just going to flag 3 points of interest today. First of all, a strong improvement in sterling back to 140.27 shortly before we recorded the video. That's up around 0.63% against the US currency on the back of concessions from the EU and what looks like a transitional deal for Brexit. The New Zealand dollar has also moved overnight, down around 0.3% against its American counterpart. We had seen some decent rallies in the Kiwi of late, so that may now have come to an end temporarily at least. And dollar index itself sliding 89.94 back below 90, down around 0.32% over the last 24 hours. We flagged this 90 level before, quite key in our opinion. There's lots of pressure on the US dollar at the moment, and we'll look at some of those pressures later in the video. What's on the calendar then? Events that may move the markets today. A pretty compact calendar. G20 meeting is ongoing in Buenos Aires. We've already had house price index data out of Australia for Q4. And perhaps more importantly there, we've had the RBA minutes and a speech from the Reserve Bank of Australia's Assistant Governor Bullock. From Japan, in the last couple of hours, we've had leading economic index data and coincident index data, both read slightly lower than we might have anticipated. To come at 9:30 GMT, probably the real meat on the bones today, a raft of inflation data, both retail price index, PPI, and consumer price index data out of the UK for February. A test, really, an early test, if you like, of that rally in sterling from the data there. And then to come at 10 o'clock GMT, we'll have the influential ZEW survey data for March out of Germany. Right, breaking news and comment then that's caught my eye overnight. First of all, tech shares have led US equities lower. The US 100 index fell by more than 2% yesterday in a broad-based sell-off. The Reserve Bank of Australia remains concerned about wage growth and levels of household debt in the country. Rates look likely to stay on hold in Australia until that changes, the minutes reveal. Meanwhile, China's President Xi gave a stern warning to Taiwan and other separatists in a speech made to Parliament yesterday. We tend to think of Taiwan as an independent nation, but the Chinese view that in a very different light. Right then, food for thought. Something to take away with you into the trading day. Why not think about this? Our attention of late has been focused on trade and White House staff changes, but the finances of the Trump presidency also warrant scrutiny. The budget deficit is widening once more, even as revenues take a dip before the effect of tax cuts. And we can see that in the charts here. These are US government revenues. They are falling at the turn of 2018 and into the first quarter. Meanwhile, the budget deficit is growing and moving to levels that we haven't seen since 2014. So tax cuts are likely to trim government revenues further. If Mr. Trump has got any design still on spending on infrastructure, he'll probably have to borrow that money, and that will again put pressure, downward pressure I would suggest, on the path of the US dollar. Right then, risk warning time. Please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of the products for you, then please contact your Pepperstone account representative.